Goldman Sachs is the worst performing big U.S. bank stock this year. Shares down roughly about 25%. And Morgan Stanley this morning saying it may not get any better, and that the stock is now firmly in no man's land. Morgan's analysts, they're downgrading Goldman to an equal weight rating, cutting her price target by more than 20% to $226. It is our call of the day. A lot of the call has to do with the investigation around MDB, 1MDB, the Malaysian Development Bank, the big scandal there. By the way, Billion Dollar Whale, fantastic book. Everybody should read it. Anybody agree or disagree with that Morgan call on Goldman Sachs?
Well, I own the stock, okay? So, look, I'm looking at what she put out there as the worst-case scenario of a $1.2 billion fine and $600 million in return fees to Malaysia. And I've got to say, I just don't see that worst-case scenario happening. Now, she's not pounding the table and saying it's absolutely going to happen. She's saying it's the worst case. The big difference here is that these folks worked around the compliance department. And I've worked at Goldman Sachs, so did Jenny. I mean, albeit it was 15, 20 years ago. I got to tell you, their compliance regime is incredibly tight. This was not something that was enterprise level in terms of what went wrong. So the idea that they're going to get the maximum fine is unlikely. Are they going to get fined? Almost certainly, but not $1.2 billion. And the stock trades at just below book value. So you're kind of getting it for no risk.
So that's a great point. The great point is 15, 20 years ago. And I think Wall Street thinks of Goldman Sachs as the company
you could be right.
from 15, 20 years ago. And I think the problem for Goldman Sachs right now in this environment is the street really doesn't know what Goldman Sachs is anymore. Right. Goldman Sachs is not the mega conglomerate trading firm that it once was previously. They've introduced, obviously, things like Marcus. So I think it's a different business model that the street's trying to get comfortable with. I would argue, to Goldman Sachs' defense, if they are back to that trading conglomerate that we once knew in a highly volatile environment, in particular with the rates moving as well as they've done, you should see trading revenue increase. But again, I'm not necessarily sure what Goldman Sachs is at this point in 2018.
Offsetting that, I think one of the points in the in the downgrade today is, there's the IMDb fine, but then also that analyst keeps the estimates for investment banking revenue growing. So it's saying, they're growing from $8 billion this year to a $9.2 billion expectation for next year. That's pretty aggressive. And if I think back to when Jim and I worked there together, it was a different time. It was 2001. But I was in a group then where we saw the investment banking pipeline go to nothing overnight. And if we do have this really choppy kind of ambiguous market that we're in, the investment banking business could slow down a lot quicker, and that could be a big impact. So that would be a negative. And if we look at the PE that's trading at an almost all-time low at 7 times or below 1 times book, that could be really compromised if investment banking revenues dry up more than expected or more quickly than expected.
I think you've got to draw a distinction. And, Joe, your point is very well made. This was a long time ago. But you've got to draw a distinction between something like the LIBOR scandal, which involved many banks and was systemic and was, while not endorsed by those banks, certainly understood to be happening. I mean, that was found out in the investigation. This was something where individuals who worked for Goldman Sachs did things they shouldn't have. The bank didn't do it themselves. Now, the bank is going to get punished for things like failure to supervise. That's how this works. But $1.2 billion in fees, and by the way, getting the whole $600 million back, good luck. That goes to court. You'll get something back, Malaysia. You deserve to, but not $600 million.